Welcome back to Stock Predictor, the place where retail investors get the truth without the noise, without the hype, and without the clickbait. Today's video is one a lot of you have been waiting for, because YieldMax has finally responded to the growing drama around two of their most talked about weekly dividend ETFs, ULTY and MSTY. There's been backlash, confusion, rumors, and a ton of comments from you guys asking, are investors actually selling these ETFs, or is this noise just social media exaggeration? So today, we're breaking it all down. Why the hate started, what YieldMax said in response, what the real data shows, and what this means for anyone holding or thinking about buying ULTY or MSTY. Let's get into it. So first, let's talk about the elephant in the room. Over the last few months, ULTY and MSTY went from being praised as potential weekly income machines to becoming some of the most controversial ETFs in the retail investor space. People were saying things like the payouts were shrinking, that prices were dropping too fast, that the option strategy wasn't sustainable, that these ETFs were scams, and that investors were quietly dumping shares behind the scenes. TikTok had its own wave of hate, Reddit had threads popping off every week, and even YouTube comments got wild. Some people defended these ETFs like crazy, and others attacked them harder than short sellers on a meme stock. But here's what's interesting. YieldMax stayed almost completely silent through all the noise. No big statements, no viral interviews, no hype. And honestly, that silence is what made the drama grow even more. Investors took the silence as a sign that something was wrong. And finally, we have a response from YieldMax that gives us a lot of clarity, not only about ULTY and MSTY but also about how these option income ETFs actually work. And once you hear the explanation, a lot of the confusion starts to make sense. But before we get to the response, we need to break down why the hate even started, because once you understand the source of the frustration, the response hits way harder. Let's start with ULTY. ULTY launched with big excitement because the name, Ultra Option Income Strategy ETF, made people think mega yields, massive income, and a strong diversified portfolio. The marketing was clean, people were curious, and the idea of having weekly distributions pulled in a huge chunk of retail investors looking for passive income. But here's the problem. Many investors didn't fully understand that these ETFs don't guarantee stable payouts, and they don't guarantee long-term price stability either. ULTY uses a covered call style strategy, similar to most YieldMax ETFs, but applied to a basket of underlying stocks. Covered call ETFs can produce high income for a while, but they also limit upside, and if the underlying stocks go down or become more volatile, the premium they earn changes. That means the payouts can go up or down week to week. Now let's talk about MSTY. This one became even more dramatic, because MSTY is tied to MicroStrategy, the same MicroStrategy that's basically a massive proxy for Bitcoin. When MSTR stock goes up, down, or sideways, it impacts MSTY. And because the ETF uses an option-based income strategy, the premium collected can vary hugely depending on volatility. So what happened? Bitcoin cooled off, volatility dropped, premiums dropped, and suddenly MSTY's distributions weren't matching the wild expectations created by hype videos online. Retail investors freaked out, some felt misled, others argued the strategy was misunderstood. And that's when the hate started rolling in. So now let's talk about the part everyone wants to know, are people actually selling these ETFs? And this is where YieldMax's response finally matters. YieldMax explained that fluctuation in distributions is normal. Weekly payouts do not mean guaranteed consistent payouts. Many new investors didn't know that. YieldMax also said that the share price behavior of ULTY and MSTY isn't a mystery, it's tied to the structure of option income ETFs. They generate income by selling upside. That means, yes, they pay high yields, but you sacrifice long-term price appreciation. If the underlying assets fall, the ETF price falls too. That's not a flaw. That's literally how the strategy works. The real issue is that many investors thought these ETFs were set-and-forget income machines, but they work more like cash flow tools for investors who understand option decay, volatility, and premium cycles. So what about the selling pressure? Yes, there has been selling, but not at meltdown levels. A big chunk of the movement we're seeing is rotation. In other words, short-term retail traders jumping in for big early payouts, taking profits, then leaving when premiums shrink. That's not a sign the ETF is failing. That's normal behavior for high-yield option products. In fact, YieldMax confirmed that inflows and outflows have been steady and mostly balanced. That means long-term investors aren't running for the exit. What we're seeing is more of a psychological reaction from new investors who expected unrealistic payouts forever. Now let's talk about what YieldMax said regarding the hate. They acknowledged that social media creators unintentionally spread unrealistic expectations by hyping early payouts without explaining option premium volatility. They also acknowledged that ETFs like these should be considered tactical tools, not core holdings. YieldMax didn't blame the investors. They simply explained that these ETFs work exactly as designed, but the design must be understood. That's why we make videos like this on Stock Predictor, to help you understand the strategy, not just the marketing buzz. So what does this mean for current ULTY and MSTY holders? It depends on what your goal is. If you bought these ETFs expecting stable weekly income at the same rate forever, you will be disappointed because option income doesn't work that way. Premiums change with volatility. If you bought them expecting long-term stock appreciation, that's not how option income ETFs behave. Their price tends to drift down slowly over time because they constantly sell upside. If you bought them for tactical short-term income or short-term volatility harvesting, then the ETFs are performing exactly as intended. A lot of investors blame the ETF when the real issue is strategy mismatch. For example, someone expecting long-term price growth will hate these ETFs. Someone expecting stable weekly payouts will also hate these ETFs. But someone expecting premium-based cash flow with volatility exposure, they'll understand these ETFs better. And YieldMax made it clear, they are not pretending these are long-term wealth builders. These ETFs are made for income-focused investors who understand the mechanics. So let's address the big question: should you worry about these ETFs collapsing? Based on everything YieldMax disclosed and the current inflow-outflow patterns, the answer is no. These ETFs are functioning as expected. The only collapse happening is in investor expectations, not in the ETFs themselves. Now, is there risk? Of course, every option income ETF carries structural decay risk. That's normal. If you want long-term growth, buy growth stocks or index funds. If you want income and understand the trade-offs, these ETFs are tools, not miracle machines. Now let's talk about what most people ignore: volatility cycles. When volatility rises, premiums rise, and payouts rise. When volatility falls, payouts shrink. ULTY and MSTY are experiencing a volatility cooldown, especially MSTY due to Bitcoin's stabilization. A lot of angry investors didn't realize this is temporary. If volatility picks up again, which it always does eventually, payouts will increase again. This doesn't mean guaranteed higher distributions, but the structure means volatility drives the income engine. YieldMax emphasized this in their response, but many people ignored it because they focused only on, "My payout dropped this week." So here's what happens next. Retail investors who understand the mechanics will hold or trade these ETFs strategically. New investors will probably continue complaining whenever payouts shrink. Some will sell, some will rotate. That's normal. The ETFs will continue functioning normally. And social media will continue creating drama because drama gets clicks. But the truth is simple: ULTY and MSTY are neither perfect nor broken. They are specialized tools that many investors misunderstood. And now that YieldMax has finally clarified the strategy publicly, the conversation is becoming way more realistic. So what's my advice as stock predictor? Don't buy any ETF you do not fundamentally understand. Period. Option income ETFs are not bad, they're just misunderstood. These ETFs can generate high payout periods, but they aren't consistent income machines. They can be great tactical tools, but they're not retirement portfolio anchors. If you're going to invest, understand the trade-offs, understand volatility cycles, and understand how covered call mechanics cap upside. If you know that, these ETFs won't shock you. What investors should really be watching is not the hate, not the drama, not the rumors, but the volatility environment. Because volatility is the heartbeat of ULTY and MSTY. When it rises, the ETFs breathe easier. When it falls, payouts contract. You don't have to love these ETFs, but you do need to understand them. And that's why we broke it down today. If you appreciate videos that cut through the noise, hit subscribe to Stock Predictor, drop a like, and tell me in the comments if you want a breakdown comparing ULTY and MSTY to JEPI, JEPQ, or other popular income ETFs. Thanks for watching, and I'll see you in the next video.